Other than the at acquisition consolidation journal entry, Chapter 3 also looks at the since acquisition consolidation journal entries where we measure and recognize changes to the NCI balance. A useful tool in determining the amounts for those journals is the analysis of equity. What I like to use is what you see in front of you. This is what I refer to as the timeline, and it works exactly in the same way as an analysis of equity. It has an at acquisition section, it has a since to opening balance section, and a current year section. The reason why the analysis of equity and this timeline is divided into these sections is because it talks to the statement of changes in equity. In the statement of changes in equity, we also have an opening balance to present and current year movements in my equity items. The reason why we have to analyze the equity of S is because we have NCI. We need to determine how much of the equity of S, first of all, is allowed to be in the group, and then we need to determine how much of that equity is attributable to NCI and how much is attributable to the owners of the parent. By attributing to NCI, you then are left with the equity that's attributable to the owners of the parent. We start by identifying the at acquisition equity of S, and thus far we've only worked with share capital and retained earnings. These equity items get eliminated through the at acquisition consolidation journal entry. At acquisition date, we also measure NCI as either at fair value or at their proportionate share of the net assets of S. As part of the consolidation process, we always start with what we have available from the separate financial statements of S. What we now have available is the TB balances, opening balances of these equity items. Because the share capital of S gets eliminated through the at acquisition consolidation journal entry, and because we assume that there's no further movements in the share capital since acquisition date, we do not work with share capital any further. Included in the retained earnings opening balance of S is the at acquisition retained earnings, which gets eliminated through the at acquisition consolidation journal entry. Therefore, I'm only left with the movement in retained earnings of S since acquisition date. This movement in equity of S has to be attributed to the equity participants being the owners of the parent and NCI. For this NCI amount, I need a consolidation journal entry. I do the same for the current year. The current year equity movements from the separate financial statements of S also has to be attributed to the equity participants. The only item you've seen thus far is profit for the year as part of the movement in retained earnings. This movement also needs to be attributed to the equity participants being the owners of the parent and NCI. Again, the amount attributable to NCI requires a consolidation journal entry to change the NCI balance. After you've done this, you will now be able to calculate the closing balance for NCI at the end of the reporting period, and that will consist of this at acquisition amount that you've created through the at acquisition journal entry, plus this amount through the since to opening balance consolidation journal entry, plus this current year consolidation journal entry for the profit attributable to NCI. That will add up to your closing balance for NCI. We will now look at the specific journal entries. The consolidation journal entry for the since to opening balance movement attributable to NCI would be as follows. Debit retained earnings opening balance of S, credit NCI. What do I achieve with this consolidation journal entry? I achieve a change to my NCI balance. I have now increased my NCI balance with the corresponding movement in the equity of S that is attributable to NCI. And with the debit to retained earnings, I make the retained earnings of S less for purposes of the group, so that what's left in the group is the retained earnings opening balance attributable to the owners of the parent. For the current year movement attributable to NCI, the consolidation journal entry is the following: debit profit attributable to NCI, credit NCI movement for profit. What have I achieved through this consolidation journal entry? Again, I've increased the NCI movement with the portion of the current year movement in the equity of S, and the debit profit attributable to NCI is treated as a reduction in the profit of the group, so that you left with the profit of the group attributable to the owners of the parent.